What if I told you that the rich don't pay taxes? Legally. See how the world's elite employ armies of lawyers and use secret tax havens like the Cayman Islands to slash their tax bill. Discover how this elaborate tax avoidance is costing you money and impacting your local communities. So what exactly are tax havens? Simply put, they're countries or places with very low or no taxes. They also have strong laws about financial secrecy. This makes them attractive to people and companies who want to pay less tax. These places often offer confidentiality, making it hard to know who really owns the money or assets held there. Think of it as a place where money can hide from the taxman. How do the rich use these tax havens? Well, they set up shell companies that exist on paper but don't do much real business. These shell companies are often located offshore, in places like the British Virgin Islands or Bermuda. The wealthy then move their money and investments into these shell companies. This allows them to avoid paying income tax, capital gains tax, and even inheritance tax in their home countries. One common trick is shifting profits. Multinational corporations, or MNCs, might make a lot of money in one country, but they can make it appear as though the profits were earned in a tax haven. They do this through things like transfer pricing, where they sell goods or services between different parts of their company at artificially high or low prices. Another method involves royalties. A company might move its intellectual property, like patents or trademarks, to a tax haven and then charge its other branches high royalties to use them, moving profits to the low-tax jurisdiction. They may also take internal debt. You'll often hear about places like Luxembourg, Switzerland, Ireland, and the Netherlands. These countries, along with places like Singapore and Hong Kong, are popular because they offer low corporate tax rates and strong financial secrecy. Delaware, in the United States, is also sometimes used for similar purposes. This tax avoidance has a big impact. When the rich don't pay their fair share of taxes, governments have less money for important public services like schools, hospitals, and infrastructure. This can lead to budget deficits and austerity measures affecting everyone. It also increases social inequality as the tax burden falls more heavily on ordinary people. This can lead to corruption and erosion of trust in government. There are international efforts to stop tax evasion. The Common Reporting Standard, CRS, and the Foreign Account Tax Compliance Act, FATCA, are designed to promote automatic exchange of information between countries. This makes it harder to hide assets offshore. Organizations like the OECD and the UN are also working on international tax reforms and promoting tax transparency. However, many challenges remain. It's difficult to track illicit financial flows and enforce regulations across borders. Tax laws are complex, and wealthy individuals and corporations can afford the best lawyers and accountants to find loopholes. More transparency and international cooperation are needed to create a fairer global tax system. There are still unresolved questions. For example, how can we better regulate the behavior of financial institutions and intermediaries who facilitate tax avoidance? What impact do tax incentives offered by some countries have on others? Also, how can governments effectively sanction tax fraud and pursue tax crime? If you found this video informative, please like, share, and subscribe to our channel for more content on important global issues.